I don't see the situation of October 2023 repeating itself. And so the new norm that we speak of 950, that is where the market settles in 28, 29, 30, all the way through to 33, I think is important. That you will not experience, I don't think, again, that dramatic collapse we saw. And the same holds for cattle. And I know for so many people, as they look to remain in the industry, to take a deep breath and move forward, enjoying current prices, but reinvesting, I think you've got to do it with some confidence. And I think that we've learnt from the past, we've made structural changes today. And as I said, I see the new norm giving some confidence to people to stay in the game and continue down the livestock road.
Welcome to the Profitable Farmer podcast, where we share stories and tips to help you run a better farming business and create your very own freedom farm. If you're looking to work smarter and not harder in your farm business, welcome. You're in the right place. G'day everyone. Welcome again to Profitable Farmer. I hope this finds you incredibly well. We've had a decent rain event here, which sets up our spring, which is brilliant. I hope the season's been kind to you. In this episode, it gives me great pleasure to introduce, I'm going to say, certainly nationally renowned, probably globally renowned meat industry analyst and expert. So many hundreds of farming families across Australia, probably thousands, follow Simon Quilty and his meat industry analytics and outlooks to give us a really accurate, really significant and incredibly optimistic assessment of the red meat market for Australian farmers. I could think of no better person to call on. I saw Simon speak about 12 months ago, and he was willing to put his house on the fact that he felt we were going to get to north of $10 per kilo for lamb, and he gets to keep his house. So there's so much depth that goes into Simon's research. It's a real pleasure to interview him and to share his insights with you today. So just to introduce Simon, he graduated from Melbourne University Ag Science in 1987. He spent 30 years in the meat trading, processing, buying, risk management space with large companies like Louis Dreyfus Australia, like ConAgra Foods, and like Southern Aurora Group. In 2020, he established Global Agri Trends Down Under in conjunction with the US parent company owned by Brett Stewart. Global Agri Trends today offers a variety of updates, starting with a Monday Thought of the Week podcast and detailed weekly updates for subscribers across the meat and livestock market. He also brokers swaps on behalf of large financial institutions in Australia and the US, and brokers physical meat products around the world for Australia, New Zealand and India, working with large international companies that have interests in China, Australia, New Zealand, Japan and the US, which gives him hands-on and direct access to the intelligence that we need back here from our major trading partners. In 2022, Simon was awarded a Churchill Fellowship, where he travelled in a research project looking at methane reduction schemes in the livestock sector. And his report around those findings were released in December of last year. It gives me great pleasure to introduce Simon Quilty for his outlook on what we can expect in the medium term for the red meat sector. So Simon, we met 12 months ago at Loch Bass's annual conference. Back then, you bet your house that we were going to go north of $10 and you've still got your house. So well done on that. And yeah, thanks for your time and welcome to Profitable Farmer podcast.
Thanks, Jeremy. Nice to be here.
So Simon, really interested to get your take on the global and then local perspective for the red meat sector.
But before we do, perhaps, can we just reflect on what's happened broadly over the last 3 years? We've had a period of really strong prices. What's your sentiment on what has played out for us just over the last sort of 3 years?
Well, I guess we've had strong global demand, Jeremy, and part of that is driven by US prices going to record levels. And because Australia, not only is it our largest market, of which this year will probably ship close to 400,000 tonnes, but it's also our largest competitor, Jeremy, in terms of beef around the world. So we compete directly with them in China, Japan, and Korea, and US prices have been rising dramatically as they've liquidated their herd and production's got tighter and global, well, demand within North America has been on fire. So I guess when you add up not just what we send to America, but the fact that we compete in those three other markets, China, Japan, and Korea, that accounts for 78% of our beef exports. And when America lifts their prices domestically, that lifts Australian pricing into those other markets as well, Jeremy, in particular on grain-fed, but also it flows onto grass-fed as well. So it's been incredibly exciting because America introduced tariffs, as you know. That's very inflationary. And so not only have they had this kind of, I guess, pressure cooker within because of the lack of supply, because of liquidation, but Donald Trump's tariffs are very inflationary, and that's helped push prices even higher. So we've benefited in both beef and lamb because of these higher protein prices in North America.
What's behind that liquidation that you speak of?
To begin with, in America, it's been driven by a drought that went for a good 2 to 3 years. And so that tightened the numbers considerably. What's interesting is that drought, you could say, has broken, but their ability to rebuild yet has not really happened. And so its prices have risen dramatically, and still they don't seem quite high enough yet to trigger the rebuild, which would therefore mean prices would go even higher again, Jeremy. So I think that we're here today mainly driven by strong demand. But when you introduce that layer of now tighter supplies, it takes our pricing to, I think, the next stage, which I call unsustainable pricing. And we'll go up 30 to 35% from here, and then we'll come down 30 to 35% to what I call the new norm in pricing.
What do you think the new norm might look like?
I think the new norm, Jeremy, for cattle and let's use feeder steers, in particular Angus, as our guide, is about where we're at today, 550 on Angus feeder steers. I think it rallies up to 750 by the end of next year, possibly early the following year, but on the lack of supply. So I call, then prices to come down over the following 18 months after that, back to where we are today at 550 in 2028. And when we level out for probably the next 5-6 years after that to 2033. In lamb, the new norm, I think, is at 950. So, we'll rally up, I expect, by July, August next year. We'll get to 1350 in trade lamb and then come back off. We may revisit 1250 the following July, August. And then in 2028, we come back to, I think, about 950 for the following 5 to 6 years. Once again, the new norm.
They're pretty optimistic outlooks, both of those, Simon. Would you mind just sort of giving us a bit of context around, with our major exporting nations, what is behind that strong demand across each?
Sure. So with the beef side of things, as I said, strong demand, and it's been export driven up until now. But I think we move into a rebuild by probably, for Queensland, the last quarter of this year, October, November, December. And I think for Southern Australia, it'll start probably in the first quarter of next year. So interestingly, the ABS slaughter figures came out, Jeremy, about 2 weeks ago. My forecast for this year is at about 9.3 million cattle to be slaughtered across Australia. MLA are at 9.4 million, but I think we start to then fall away as we move into a rebuild. Next year, I've got my slaughterings down 15%. MLA are only down 3%. And the following year, I've got slaughterers down 30% from this year, and MLA's only down 7%. So I think that this period of unsustainable prices of 30 to 35% is driven by lack of supply due to this rebuild. Not that the strong demand remains there globally, but truly it will be the lack of supply in Australia that pushes prices to these record levels. And the same holds in mutton, is that we've seen, and in lamb and sheep meat, is also this extraordinary tightness that we've had where we've, continually we've been killing into the flock. And as a result of that, we've been up above the 2 million head mark, which is the key area for slaughterings. And we've been there for a good 9 quarters or so. So in my mind, the tightness in the lamb sector, first of all, we'll see the mutton or the older sheep tighten up, the breeding flock gets tighter, and then as a result, the lamb numbers start to get pretty tight as well. So that 1350 is a direct result of not just strong global demand, but really driven by lack of supply, just like in cattle.
Is slaughtering capacity a bottleneck at all, or can we handle what you've just described?
I think we really have addressed that problem, Jeremy, and it really was. I mean, if we cast our mind back to 2023, when truly that was our challenge at the time, there was a genuine lack of workers in the system. And I think the bricks and mortar that we had in the country wasn't enough at the time to ensure. So what we saw was too many cattle coming forward, not enough workers to process them, and therefore prices collapse in both the sheep meat sector and in the cattle sector. Today, it's very different. I think we've added probably around about 6,000 head per day into the system since then, based on bricks and mortar, particularly in southern Australia. And then the other additional thing that we've put into the system, Jeremy, has been additional workers. So the number of workers that are now able to come to Australia and work in terms of actual numbers, in terms of 482 and 457 visas, is up 76% since October 2023. And when COVID was at its worst in, the fourth quarter of 2021, we have more than doubled the workers. Today, we've got 120,000 or so in the country. Back then, there was less than 50,000 workers. We've got the people now, and we've got the bricks and mortar. And Jeremy, what's interesting to me is that for the first time in 20 years, the southern kill of New South Wales, Victoria, South Australia now exceeds the Queensland kill or the northern kill. So we've not only increased since October 2023 by 32%, but Southern Australia's role has dramatically increased and is now by far the largest slaughterer of cattle compared to the north.
What does that mean? Does that change the mix of quality exports that are going offshore, or what does that mean practically?
I think it really points to some potential changes moving forward. So the dominance of the feedlot sector in northern New South Wales, Queensland has been quite significant. And I think we're going to see a growth in southern feedlots because of this larger kill capacity in the south. So I think that's a trend that is one to watch, that we'll see a growth in the abattoir capacity in the south. But also to your point about what does it do to the mix, I think that a lot of these southern operators have truly worked in those quality end of the market where the Boss Taurus type animal exists. And so there will be a lot of pressure due to the increased capacity in the south on that quality end of the market as they try to fill the shackles, the chains, to keep them moving. So they don't want to lose any workers. They want to maintain their supply to certain customers globally. And there'll be this real enormous pressure on buying cattle in southern Australia to fill those chains. So if you look at the Angus content of the southern herd, it sits at 73%.
Yeah.
So when we've had a kill or liquidation in the south of Australia the way we have, and we kind of reached record levels in that liquidation for southern Australia, we've really decimated the southern herd. And as a result of that, Jeremy, it means that there's going to be a real desperate chase or need for, I think, Angus feeder steers over the next 2 years as the south looks to fill the shackles, but also demand due to the lack of supply, due to the enormous liquidation of the southern herd, means there's a severe shortage of, I think, quality cattle, in particular Angus.
So with 950, for example, being the new norm and then 550 feeder steers, do you see that underpinning a rebuild that is quite dramatic and quite quick, or how do you see the rebuild taking shape?
I think this time round, it's a tale of two cities or a tale of two regions in Australia, the north and the south. So 44% of the herd exists in Queensland and 38% of the total herd exists in southern Australia, Victoria, New South Wales, South Australia, of which 5% is dairy. So when you think about that, and I think the numbers in the north have been reasonable, but I think we're going to see a mild rebuild in northern Australia. And we've been basically in a holding pattern, if you look at the female kill ratio for that area, for the last 9 quarters. And I think what we're going to see is, because prices have now increased, particularly feeder cattle prices, due to the south being so tight, it's triggered a rebuild in the north. The reason why Queensland is going to be the first to rebuild, I think, is due to lack of on-farm debt within Queensland is far less than in Victoria, South Australia, and New South Wales. So debt's really important, and the banks are keen for farmers, Jeremy, to reduce debt. And so you'll see that the liquidation in the south, because they're going to continue to kill heifers, will continue at least into the final quarter of this year as they lower debt, even at these higher cattle prices. But in the north, the debt's a lot less, and so they will move into a rebuild much earlier. But it'll be a shallow rebuild for the north. I think the south, due to the decimation that we've spoken about, will be a lot deeper and a more vigorous rebuild. And the end result will be pretty dramatic movements in prices, particularly, as we said, Angus. But also, I think it's going to be a much longer rebuild compared to what we saw in 2021, 22, where New South Wales back then brought cattle into state, in particular Bos Indicus type animals, and they all flooded into New South Wales. You probably remembered that period, Jeremy. Well, I don't see that happening again, but because for many, that was a mistake. They didn't perform well, and as a result, I don't think we'll see that type of trend again the same way it happened back then. So a longer, slower rebuild, and from within the Angus herd itself, is likely to happen.
Thanks, Simon. So what about your comment on, I guess, the change in mix of merino versus red meat across Australia? Are you seeing continued trending towards red meat with these strong prices? The wool industry is obviously underwhelming and has been for some time. Would you mind speaking to the herd in structure and how the flock, structure and its rebuild?
Without doubt, we've seen, a migration out of the wool industry. And I think that's the key or the starting point to the discussion is just some of the challenges that were had, as the wool industry has really struggled to gather momentum. And so when we talk or look at what the wool clip has been in recent times, the clip itself, we've seen over the last 3 years, the ongoing, fall in that clip size. So I think the current figures, and just bear with me as I recite some of the numbers that I'm looking for, but we've seen the size of that clip fall dramatically.
Thanks, Simon. So what about the composition of the wool flock and that trend that we're seeing away from merino to meat sheep? Would you mind just giving us your insight to that?
Yeah, so, the evolution of the shedding breed is one that's, well documented, though many are still trying to guesstimate what proportion of the flock today is shedding sheep. I guess I would think somewhere around 20%. But probably the guide where, those that have exited the wool industry, and I think that have been substantial, is the fall in the wool clip. And we know there's, production and climatic reasons, but also people are voting with their feet and getting out. But the 2024-25 wool clip fell by 12%, and the current wool crop is expected to fall by another 8.4%. And I don't think it stops there, Jeremy. So I think there's a clear message to me that wool producers are exiting the industry. Are they going into other livestock? I think some are, but I think a fair portion was going into cropping as well. The other interesting indicator of that, exiting the wool side of things, we see in New Zealand as well that the trend remains there. And Jeremy, in the last 22 years, the New Zealand flock size has fallen 40%. So it was just under 40 million head 22 years ago, and today it sits at 23.36 million. And next year is expected once again to fall further, with lamb kills down 1.5%. So it's not just an Australian situation, but we're seeing it out of New Zealand as well, where the flock size continues to fall. And there is definitely a migration across into self-shedding sheep. As I said, can only guess at where those numbers are at. There's no doubt to me that the strength of global markets, record prices for lamb, is an attraction to move across into a meat production system.
So are the numbers of meat sheep in our flock increasing, and will they continue to increase over time?
Yeah, I think so. I think that's a given. It's difficult to exactly pinpoint the number that they've increased by. But as I said, I've heard figures as close to 20 to 25%. And I think that trend continues for sure.
It'll be interesting to see how the next few years plays out. I interviewed Brett Stevenson from Market Check the other day, and he's predicting well below decile 5 grain prices for the medium term, which means we've seen a significant trend, haven't we, towards cropping. I wonder if with lower grain prices and higher meat prices that we might see, those mixed farmers trending back towards livestock over the next few years.
I think so. I spoke last week at a Wagga forum, 130 or so farmers, and it was definitely an interesting kind of feedback or people expressing their thoughts that they were not necessarily getting out of crop production, far from it, but the better word was tweaking. So let's assume that they may be doing 60% cropping, 40% livestock. A number of them said, we're going to reduce the amount of grain we're going to put in. We're going to focus more percentage of our business on pasture, with either the option of buying more livestock if they can afford it to put on those, or at least having the ability to cut fodder of some sort, which once again, they can market and sell. So definitely a feeling, once we kind of gave our outlook, Jeremy, of how we see things going forward, I think that the feeling was that in the cropping sector, for a number of operators, they're coming up to a period in which they have to reinvest in their cropping equipment, whether it's tractors, headers, you name it. And the cost of doing that is enormous. And I think the thought was if you could take the pressure off a little bit, delay that need for a year or two, or not have to do it at all, would be a preferred outcome. So one of the challenges, I think, in the cropping sector is not only the thought of lower prices or a year of subdued pricing, but also these high input costs simply don't go away, Jeremy.
I think it's a fair comment. And I think Brett's comment was that we're likely to see input prices remain high for the medium term while those lower prices come into reality. Simon, transitioning now to global markets. Two questions. One, what impact did Trump's tariffs have, and will they sustain? And then what are some of the consumption trends that you're seeing in and across some of our major trading partners?
Yeah, so I think we could say that the influence of Trump's tariffs has actually been a positive on Australia's exports, in particular on beef. So I can cite you several examples. One, it's inflationary, so that we've seen prices in America move higher as a result of tariffs. That has therefore pushed the pricing of American meat, beef, into other markets at a much higher level. And so if you look at Japan and Korea, for example, our number 2, 3 markets is that Australia and America make up 81% of Japan's exports into that market of all imports, and in Korea, a whopping 92%. Wow. So as America increases, Jeremy, prices domestically, Japan and Korea have to buy away from Mrs. Housewife in America. And therefore, prices into Japan and Korea move higher out of America, that in turn helps lift Australian pricing and Australian demand. And the same holds for China as well. But once again, thanks to Donald Trump and the Phase 1 agreement, the renewal of export licenses from America into China back in March this year, they expired, and China didn't renew American export licenses of beef into China. As a result of that, today there is no US beef exports going into that market, Jeremy. So once again, thanks to Donald Trump, we have the Chinese market to ourselves on grain-fed beef. And Australia, the demand for Australian beef is exceptional at the moment. Then the third interesting factor here in terms of how tariffs have impacted is that Brazil today has a 50% tariff on it. And if you add that to the tariff under the current arrangements into America, where at the start of each year, they're part of a group of exporters under the other category that has 65,000 tonne access. That, Jeremy, was filled within the first three weeks of January this year. Now there's another 50% on top of the 26.4% duty that existed because they filled the 65,000 tonnes. So overall, they're facing a 76.4% duty, the Brazilians, into America on beef. Simply, they cannot compete with such a high duty, and as a result, Brazilian beef, lean beef in particular, has dried up into America, and America is turning to Australia and New Zealand to supply lean beef. So it's another example where Trump's tariffs have assisted Australia to an enormous length, because prior to that happening, Brazil was exporting more volume into America than Australia. So we have created another opportunity as a result of tariffs.
How long do you see that China
situation?
Are we going to have that advantage for some time?
Well, it depends on what the excuse being given by China is, that December last year, so almost a year ago, they announced a review on all imports of beef because of over the previous 2 years had been record volumes into China. And so the farmers of China said, enough. All this Australian, Brazilian, Argentinian beef coming in, it's flooding our market, it's making life terrible for us. And so the government did a review with the belief that they would introduce safeguards globally on all beef exporters into China. That review is currently underway. It was the findings to be handed down in August. It's now been extended till November, December. The chances are, Jeremy, it's going to be extended way into next year. And the net effect is that as long as that review has not been completed, we think that's going to keep American beef out of China. So that, to answer your question, it depends on when that review is finalized, completed, the findings are handed down. We think it's now going to be well into next year when that occurs. And if that is the case, America is unlikely to get access until that review is completed.
Simon, I understand the populations of China, Japan, and some other Asian nations are in decline. Do you have any concern or comment around the demand that we'll see from those nations sort of beyond the medium term?
Yeah, I mean, I think what we've, noted is that the demand continues in those, countries globally that are with a growing middle class population. So that's one of the key, findings, or there was the OECD just recently published a report on this. And in that report, they made it really clear that we've got this continued growth of middle class economies. And at the moment, they're increasing annually at about 1.6% per year in terms of their overall consumption of beef. And I guess their clear message is that the caloric intake of those middle class income economies is about 6% over the next decade. Whereas, unfortunately, the not so well off countries, that type of intake is going to halve to less than 3%. So I guess all the indicators are we continue to see wages, both within America, within Australia, but globally continue to move higher. But also, I guess the buying power of those economies, middle class economies, continue to go higher as well. So far, everything points to ongoing demand remaining in pretty good shape, Jeremy.
What about the Middle East, Simon? Are they an important component to this equation?
They are. That's a good question. The Middle East has grown in terms of its importance, though and last year in particular, they went from strength to strength. They were if you took the region on its own, they were our single largest market. This year, they've slipped to number 2 behind America. I guess when you break down the Middle East itself, what's been, I think, the most important, growth in that market has been chilled beef. So in particular, carcasses, Jeremy, and Iran, Dubai, Saudi, Kuwait, Jordan and Qatar were all big consumers last year. This year, Iran has slipped away dramatically, not because of the war, but simply they cannot keep up with the price as lamb moves higher globally. But Jeremy, if we went back to October 2023, where there was the lack of capacity and we saw prices plummet, one of the other key parts that's changed today compared to back then is the evolution or the growth of this light carcass chilled market, air freight, into the Middle East. That today is just extraordinary, the volume that goes of those 14 to 18 kilo carcasses. Jeremy, if we had have had the access today, back then in October 23, I don't think we would have seen lamb prices crash the way they did, because this has become now an absolutely crucial outlet for like lambs in Australia that once upon a time did not exist the way it does today. So I see a lot of structural change in that Middle East market. I think as prices move higher, they will struggle to keep pace with North America, the UK, Europe, and other parts of the world. But nonetheless, I see, the opportunities continue into the Middle East. It also, I think, for this coming year, creates an interesting trade opportunity where for light lambs, the spread between heavy lambs and light lambs is going to get wider. And as a result of that wide spread, I can see the real incentivization of effectively buying light lambs, putting them into feedlots in Australia or lot feeding them for 3-4 months and selling them into that heavy lamb market for the US. So due to that challenge of trying to keep pace, the Middle East, I think, falls away a little bit here. Lighter lambs become a little cheaper compared to heavier lambs, and what we call a carry trade, where I think it'll be pretty clear to the market buying light lambs and feeding them out will create a huge opportunity.
So does that create a bit of a buffer against another price collapse like the one?
Correct. Yes, it does. So not only have we doubled the number of workers since COVID in Australia, foreign workers, not only have we increased the bricks and mortar and the capacity to kill, but also we have a much broader, diverse market globally, and in particular on light lambs, that I think is different today than what it was in 2023.
It's good news, Simon.
Yeah, it is good news, because truly part of the reason why I think a lot of farmers or certain farmers left the industry back in 2023 and got out of sheep altogether is because, unfortunately, certain farmers were forced to euthanize light lambs. And I think, Jeremy, you only ever do that once. And after that experience, you look for another way forward. And I think genuinely it was a real challenge, particularly in parts of New South Wales, but other parts of Victoria, South Australia. But you only ever do that once, I think, in your lifetime before you say enough.
Simon, what else do our farmer listeners need to know?
Well, I think that I don't see the situation of October 2023 repeating itself. And so the new norm that we speak of 950, that is where the market settles in 28, 29, 30, all the way through to 33, I think is important, that you will not experience, I don't think, again, that dramatic collapse we saw. And the same holds for cattle. And I know for so many people, as they look to remain in the industry, to take a deep breath and move forward, enjoying current prices, but reinvesting, I think you've got to do it with some confidence. And I think that we've learned from the past, we've made structural changes today. And as I said, I see the new norm giving some confidence to people to stay in the game and continue down the livestock road.
Great to hear, Simon. I know many thousand of farmers across Australia enjoy having access to your intelligence, your reports and your services. How do our listeners best find you and contact you and then enlist in your support?
Sure. Well, thanks for the plug there. Global Agri Trends, just look us up online. You'll find our website and a way to reach out to us. But for what it's worth, email address is squilty@agritrends.com. Yes, we would truly welcome new subscribers. We have a farmer rate and we believe it's a very affordable rate. So please reach out. We'd love, have you part of our week-to-week discussion papers and podcasts we do.
So we'll make sure your details are in the show notes. But for anyone listening, we recommend Simon and his analytics and his advice and support through his, I think, weekly podcast and weekly papers of incredible value. I know so many of you already follow Simon, but just encourage the rest of you to you'll get access to that incredible insight and intelligence. Simon, It's been great to connect. Really
Thanks, Jeremy.
Your time. Yeah, really good to hear that your outlook is as optimistic for the medium term as you described. Thank you for your time.
A pleasure. Jeremy, thanks again, and look forward to the next time we can catch up.
Absolutely. Thanks, Simon.
Cheers, Jeremy.
So there you have it, folks. It's a pretty concise summary for me. Quite simply, 950 is the new norm for trade lambs, 550 for trader steers. The depth of the research that goes behind Simon's predictions gives him the confidence to put himself out there to name what he thinks is going to happen. As I see so many of the best farming families and so many of the best operators across the red meat supply chain call on his expertise and support to make decisions. I hope you've found this podcast really valuable to help you get ready and make the most of the opportunities that are presenting as a sheep meat and beef cattle producer in Australian agriculture. Thanks, Simon. Really appreciate your time. Well done. Great to see such an optimistic and positive outlook. Really appreciate your time. Thanks, everyone. Bye for now. Thanks for listening to another episode of the Profitable Farmer podcast by Farm Owners Academy. If you're new to this show, be sure to follow us. If you've been a long-time listener, let your friends know about us or come continue the conversation in the Profitable Farmer Facebook group. All the best as you grow your business and create your freedom farm. Until next time, keep being incredible.